Hello everyone, welcome back to my channel. Today I am going to present to you another market update. We are specifically looking at this video show. We are going to talk about the interest rate going up higher. We are going to looking at couple information of the market condition, and at last we're gonna look at the appreciation of each city to see which one has the highest appreciation up to now. All right, so let's take a look at what we have. Okay, thank you so much, everyone. Welcome again. Let me add my information. Let me add the share screen here onto the screen for you. This is the first number that we are going to looking at is the interest rate. And as you know, we already have if you ignore all the colors in this chart, I would only focus on the blue line because the blue line is the most, how do I say that, is a very common, is the most popular program that you follow, right? 30 years fixed rate mortgage, okay? 30 years fixed rate mortgage. If you are interested in other interest rate, other program, you can look at those other charts as well. But I'm talking about a blue chart here, which is the most common right now. As you see, if you're looking at the short term, starting from, I would say August of 2021, the interest rate is going up, right? It's going up. And now, as of March 10 of 2022, the interest rate for 30 years fixed rate is already 3.85%. Now, this is conventional, right? If you do investor or you do any kind of non-income loan program, the interest rate going to be a little bit higher. But as you see, which show the fact that the interest rate is going to go higher. Okay, and is towards the end of the year, Federal expect to keep gonna continue increasing the rate. So if you are looking to minimize the monthly payment that you have to pay for your mortgage, I guess this is the time that you have to act very fast to be able to acquire a house and avoid any kind of higher interest rate than compared to the end of the year. Okay. However, though, the good news is that if you are looking at the longer term, right? If we are looking at, let's say, if we're looking at the 10 years, I'm sorry, a 5 years long history, you're gonna see that we are still not at the highest point yet for the last 5 years. The highest point is back in 2018, which is around 4.94%, right? Even though we are hitting there, we are going to that direction. That's why I'm saying that if you want to secure a lower interest rate, this is maybe the right time for you. This is not the best time, but this is the time for you to do so before it go even higher because of the trend that you see that we are going to see. We are going to have a higher interest rate toward the end of the year, right? So that's number one that I want to share with you. The next number that I want to share with you is that this is the blue chart right here. This is from Comfort Reports Company. The blue chart right here showing the accepted contract in 2021 and 2022. Okay, starting from January of 2021 to up to now. Right. I see there's a dip here in December 26th for the December 26th of 2021, and some people are going to be freaked out. But however, if I add the 2 years, 2019 and 2020, you're going to see that the same peak happening every around the same time of the year, which is normal, right? During Christmas time, nobody want to buy anything at that time. People are busy with the holidays and things like that. So it's a typical decrease right there. My point is that sometimes we're looking at this and then we say, because I want to emphasize right away, otherwise people are gonna scare about those deep and ask me what happened. If you are looking at the longer term, you see that the constant accepted contracts, right, almost a flat line right here. So as you see, we don't see a lot of less demand onto the market just yet. Okay, we don't have, well, we do have higher and lower, but for the long term, we don't see a significant change happening yet in the market nowadays. The second line that we see is that the orange right here, or the yellow, I don't know, is the background market. This is very a constant pace and a very constant pace as well, around 400 and 413, somewhere like that. It is significantly lower than than the accepted contract, however. So about 20%, about 25, I'm sorry, 20, no, 500, about 20%, 20% of the accepted contract. So it's not a lot compared to the accepted contract. So, okay, so the market is still strong. As you see, there's still a lot of activities nowadays. The demand is still high. And the people that already in the contract, they are not gonna give up on the contract, okay? Next one is a comfort market index, okay? So this one is the indication of the market when you talk into account of not only the supply but also the demand, right? The comfort market index is created by the Comfort Associates, of course. If it is higher, the number is higher than 100 points, it is a seller market. If it is less than 100 points, it's the buyer market. It is in normal when it is around 100 points. As you see on the chart here, is the 3 lines. The red one is 2020, blue line is 2021. And then the yellowish, greenish is 2022. As you see here, obviously the 2022 is not as high as the 2021, right? But it's not as low as the 2019, right? It's still higher than the 2019. So one thing that we can talk about this is 2021, the market gonna be cooling down a little bit, not as strong as 2021 compared to last year. All right. The second point that we can show is that it's not a crashing market. So if you looking at this, right, obviously number one is still higher than 2019. Now, if we go even further, 2019, 2018, 2017, 2016, 2015. All of those years, you see that it's almost a flat line below here. It's almost a flat line below here. Obviously, you see that 2019, 2021, and 2020, 2021, 2022 is the home price, the market is going up to the seller market, very significant, okay? Very significant compared to all other years, right? Because they are all other year in 2015, 2016, 2017, 2018, 2019, almost a flat line, almost very identical. It's starting picking up around the end of 2019, and it's going even higher. Now we have a little bit lower in 2022 market, but it's still significantly higher compared to the other 4 years that I mentioned. Now, the last point that I want to make in this chart, I'm sorry, I'm turning off the wrong one. The last point that I want to make in this chart is that, as you see, the first part of 2022 follow the same kind of pattern compared to 2021. So it's going to start cooling down. I expect that it's going to start cooling down now around June and July, right there. So if you want to make plan this is just the expectation, right? There's nothing warranty in the future, but as you see, it's very similar pattern. It's already hitting the peak around the end of February, early March, right? Now it's gonna start cooling down until July, August. No one wanna buy houses in that time. Not no one, but less people wanna buy houses in that time. So I expect it's gonna become lower even. Okay, so if you see more houses on the market happening soon, don't be surprised, because it's just a regular trend now, right? Regular trend nowadays for the market to cool down around June or July or toward the end of the year compared to the beginning of the year. Okay, the last number that I want to share with you here is, as expected, these are the appreciation percentage that compared to previous year. Paradise Valley has now been on the average of more than 600 per square foot. Okay, 600 per square foot. Last year it is around 470. So that is an increase of 30%. An increase of 30%. Follow that is Scottsdale, 28.9. Carefree, 27%. Rio Verde, 30%. Fountain Hills, 26%. Cave Creek is 30%. So obviously, beside Paradise Valley and Scottsdale, there's 4 different cities that outside this is very far away, and it has also a really good appreciation, more than 27%. Okay. And following that, we have Tempe, Phoenix, Wickenburg. The last 3940 3940 has about this is not in the ranking. This is in the rank. I'm sorry. This is in the ranking of highest dollars per square foot, not the highest percentage change. Okay, so Paradise Valley, as you see here, is number 1, 600, and the last two cities, College and Casa Grande, is about 151 and 172 accordingly. Although these cities even have a higher appreciation than number 1, Scottsdale, versus Scottsdale and Paradise Valley and things like that. So Casa Grande 33%, College is about 39%. The number 1 appreciation is that we are looking at Tonopah of 42%, and that is actually the highest, right? 42% is the highest right here. 34% for Avondale, Arizona City for 36%, and Maricopa City for 36%. Queen Creek is also 36. So overall, I would say that this is a great news for homeowners in the Phoenix area, because your home value has increased more than around 30% over the last year. Still expecting, because of the previous chart, right? Expect the home value is not gonna go as high when you come to next year, but it's still a very good number looking forward. All right. Thank you so much, everyone. That's all I have for this video. Thank you. Bye-bye.